Welcome back. You just heard the closing bells there on today's session. Let's take a look at where we finished out the day. The S&P 500 closing about 0.1% higher at 63.39. The Nasdaq closing up 0.25%, 23,219.86. The Dow 0.7 down on the day, trading at 44,694.09. And the Russell R laggard again at down more than 1%, more than down 1.25% at 22.52. We're going to bring in our closers panel now as we prepare for Intel's earnings to be released here shortly, as well as Decker Outdoors. Joining me in studio is Alex Coffey, our senior equities contributor and the host of Next Gen Investing, and Jeff Pierce, the senior manager of derivatives trading at Charles Schwab. We are just waiting for Intel to come out today. Also, Decker's Outdoor. As we wait here, Alex, what are you most looking for when it comes to Intel?
Yeah, Intel's a tough one because the story is such a long-term recovery story. So no setbacks, I think, is going to be a key piece. The strength in, some of their cloud-related things. It looks like the numbers are starting to drop here as well. But for the most part, do they do enough to continue this long road back? Now, so far, initial reaction, I haven't looked at the numbers yet. It's up small. If it can be up small, to me, that's a huge win.
I'm going to give you a couple numbers here right now. Second quarter revenue coming in at $12.86 billion. That's far better than the $11.88 billion that was expected. Operating margins at 3.9%, far higher than the less than 1% that was expected here. As we're scrolling down and getting more of these numbers, they're seeing EPS for the third quarter. Their guidance is coming in. Now, Jeff, as we're starting to see these numbers come in, the street responding positively here, what are your takeaways right now as we're just digesting?
Yeah, I think as we're seeing these numbers come in a little bit higher than expected on the revenue side, especially, I think that certainly gives investors some excitement around this turnaround story that they've got, whether or not we're seeing this come from people upgrading their computers ahead of tariffs or maybe getting access to AI. That could be part of it. Also, the cost cutting. I know that that's been a focus for the company. How much of that is really playing a role here? But it looks like the numbers are coming in pretty good. I see, we've got a forecasting 12.6 to 13.6 billion for Q3.
And Alex, as you're starting to take a look at these, Intel expects CapEx lower in 2026. That just came in, but their CapEx numbers for 25 saying about $18 billion. What are your takeaways initially here?
Yeah, some of the commentary sticks out to me, and we see sort of this rally start to fade. But again, to me, holding on to these numbers is a win. But it's sort of hedging language. They say the feared slowdown that they thought was coming didn't happen, but that some of the demand could be sort of that buy ahead, trying to front run tariff demand, which is hard to project, going forward. They do say that their job reduction actions total about 15%, but that they're almost done with that. So when it comes to kind of stability for this company, they had to make a lot of tough decisions over the last couple of years, and really the last, let's call it year in particular. It's been a tough road for investors, but those who are, this was my thesis for why it's hard for the stock to continue to go lower without huge setbacks is if you're still involved after this run, like you're pretty patient, you're along for the recovery, but there couldn't be something that makes you start to doubt that. I don't see anything yet that makes you doubt it, but we're going to hear from company leadership, and that can always change. Yeah,
and certainly people will be waiting for the call here, but overall, Jeff, as we're watching the market reaction here, a different story from yesterday. We're seeing shares up more than 3% right now, and as I'm looking through their forecast, for third quarter, what are some of your takeaways as of the initial forecasting and guidance that we're getting? Obviously, lots more to be answered on the call.
Yeah, so far the forecasting looks like it's, I think it's better than what a lot of investors were expecting. I mean, we're looking at a company that lost a ton of value last year. They've really struggled to compete against NVIDIA, AMD, ARM. They missed a lot of opportunities on AI, and now that we know they're focusing kind of their foundry business as well as that kind of chip business separately, I think there's been a lot of optimism. It looks like some of that might be coming together now. I think as long as we can continue to see them, focus on really that cost-cutting initiative, which we hear is nearly done, and focusing on the development of the AI side of things, this looks positive.
I certainly think it looks positive. And one of the things I think a lot of people were waiting to see here from Intel was how these job reduction numbers were coming in, what that was looking like. Intel putting out some headlines right now. Feared slowdown didn't happen. The markets look healthy to them. Their third quarter revenue projected far above the range. They were looking at estimated $12.64 billion. Their range now 12.6 to 13.6. Do you think that's one of the primary drivers behind this uptick we're seeing right now?
Yeah,
Alex?
definitely. And to me, the best way to put what I'm trying to say into words is just to use the numbers. For me, it was the turning of the corner. And they show adjusted EPS for the second quarter around this kind of 10 cent on a loss per share. But it's expected now for the third quarter to be around 0. So the flat line. They're turning that corner. So they're doing so in a little bit better numbers when it comes to current quarter, when it comes to demand. But the fact that the margin story is stabilizing, the fact that some of these job cuts and the costs associated with that are going to be in the rear view mirror, all of these are important steps towards the recovery. Oh, and then throw in there too the AI and data center revenue. Yeah, it's not NVIDIA numbers, it's not AMD numbers even, certainly not Broadcom, but it's better than expected. $3.94 billion versus the $3.73 that the street was expecting. They're gonna need some of these growth sectors to also continue to beat, because their core business, let's just face it, it's struggling. And that's why they had to go through these tough times that they have the last couple of years.
Well, certainly a positive quarter for Liputan as his first full quarter as their CEO. But Deckers Outdoor did just come out. Huge response so far, up about 10%. They posted a pretty substantial EPS beat. They came in at 93 cents. That was expected at 68 cents. Also, net sales came in at $964.5 million. That was estimated to be 901. So really positive so far what we're seeing here, and the street really likes it. We're seeing a really positive upswing here. Alex, as you're just getting a first look at the numbers, what are your thoughts here?
Yeah, without seeing, the kind of internals behind this yet, as the news wires are still scraping through and coming through these press releases, huge beat, right? I mean, this is a company that struggled a little bit, but more because of the margin concerns that have influenced apparel and footwear over the last year or so, largely due to trade uncertainty. Think Nike, think some of these other names too, but 964.5 is way ahead of the 901 that was expected. So this to me is just a huge beat, and probably a time when this is a company that's expected to be doing well, just because it has really impressive brands in UGG and Hoka in particular. But I don't know that a 7% beat, 6% beat was really what the market was ready for.
Yeah, I mean, and they are expected to do well, but in the last year they're down 25%. But for this quarter, which for them is their first quarter of the fiscal year, up 17% in revenue, up 24% in their EPS. Jeff, as you're just getting these numbers in, some of those big brands Alex just mentioned, both Hoka and UGG outperformed in the first quarter. Was that expected?
No, I mean, this is a very good performance. I mean, we look at Hoka, expected to rise about 12%, almost 20% revenue rise on that one. UGG, almost 19%. That was expected to be up just a little over 6%. Their other brands up about 19%, which was, it's really quite incredible. The pressure they've had, the macro pressure around tariffs and competition has really, as we see it in the stock, and seeing a report like this looks a lot closer to what we saw for their overall, last fiscal year revenue growth, which we saw some decent numbers in. These numbers look more like that as opposed to what we saw in Q4.
Yeah, and Alex, they're just going higher and higher. Deckers up now 13% right now. And they do mention some of that uncertainty does remain elevated with global trade environment, but their brands are doing well. As you're getting more looked at the numbers, what are some things that you're noticing?
Yeah, better than expected, but strength in the right places. Those are the two powerhouse brands under this company's portfolio. One of the things going in was going to be the breakdown between wholesale and direct-to-consumer. Wholesale has been pretty robust and continues to be direct-to-consumer. Struggling a little bit recently, but also not necessarily the strongest seasonal time either for this type of a purchase. So kind of expected. And then the other piece is going to be the margin story. And clearly, the margin story is allowed for a little bit of surprise here when you see just how impressive the growth is. The growth is accelerating after a couple quarters of disappointment. 2 quarters ago, their earnings growth was 19% year over year. Then it was 21. Well, it's uptick now to 23.5%. So it's going the right direction. All the while, you're also getting revenue growth reaccelerating. You know, the most important thing you can do in retail is have things that people want to buy. And right now, Hoka is one of those items that people want to buy.
Well, Decker's posting a really impressive top and bottom line beat there. Shares up about 14% right now. Intel posted higher than expected revenue, also gave upbeat sales forecast as PC demand picks up, and shares have turned here, now up 2% on their earnings announcement. We'll continue to talk about these, but thank you so much for being with us to break this down. Jeff Pierce, Alex Coffey, we appreciate it.